Bitcoin just did something the entire market has been waiting for, and almost nobody understands how big this move is. It didn't break a resistance level only, it closed above the 92k level, confirmed strength on higher time frames, and it is now inches away from the level that could trigger one of the largest liquidation events in the crypto history. At the same time, SEI broke into Coinbase 50 index, joining the list of the biggest, most fundamentally strong assets on the entire platform. SEI, another amazing project, got regulatory approval in one of the toughest jurisdictions on earth, meaning that the door just opened for a wave of new liquidity. And we'll have a look at SEI in a minute. It skyrocketed in the past 24 hours. Vanguard, the institution that controls a massive portion of America's retirement money, is finally stepping into Bitcoin, and that's massive. The Fed injected $13.5 billion in a single day, and that's on the exact day of the quantitative tightening, when the quantitative tightening ended. This is not random. This is not noise. This is the first real sign that tightening is over and liquidity is preparing to turn positive, which is something I've been talking for a very long time, and I've been telling you it's coming ahead. And all of this is happening as 10 billion in shorts are sitting right above the 100k level, waiting to be liquidated from the markets. This is not normal. This is not coincidence. This is the beginning of a structural shift that very few people actually can see right now. So looking at Bitcoin's chart, Bitcoin didn't just pump. It didn't just wick above resistance. It closed above the 92k level, and that close is signaling a lot. It confirms higher time frame strength. So on the daily and the weekly charts, the 92k has acted as a ceiling, and we had multiple rejections from that zone just recently. And this time Bitcoin managed to push through it and close above it. And that sets the next magnet at 98k level. There are zones in Bitcoin that act like gravity, and 90k level is one of those. It's a confluence level where we've got previous rejection, we had psychological resistance, and we have liquidity hotspot at that point. And Bitcoin loves magnets, and when magnets break, the next target is parabolic. If we hit the 98k level and we close above that, that opens up the sky to 100k and above, and eventually new all-time high. If we hit the 100k level, which is the next target after the 98k level, and we go above that, we'll see massive short position liquidated, over leveraged shorts and bears that will be out of the market, and to have late sellers trying to fade the breakout. And I think the current estimation is around $10 billion out of the market liquidated if we go above 100k level. So just keep your eyes on these levels, because we might see new all-time high sooner. Grayscale is actually calling for new all-time high in 2026. And I personally see that happening as well. And I've been talking about that for a very long time. I think the 4-year cycle, the traditional 4-year cycle that we all know, is really gone right now. Moving on to some very bullish news for projects that we hold, we accumulated on this dip in particular. One of them is SEI. SEI just entered the Coinbase 50 index. This is way more important than people realize. The Coinbase 50 is not a hype list. It's not trending coins. It's not social sentiment. It's a market cap and fundamentals weighted basket of the biggest, most institutionally acceptable assets on Coinbase. So when you break into this list, it means you're now seen as a major token, not a speculative side play. And of course, this boosts confidence, it brings more liquidity, and funds start to track the assets. So that's very bullish news for SEI. And I've been telling you this project has great potential and it's still very undervalued. And you know that institutional products often use predefined lists, like the Coinbase index, for allocations. So getting into that basket opens doors, for sure. It signals maturity. Coinbase doesn't put anything in that list unless market cap is stable, unless liquidity is deep, and unless fundamentals are strong. And SEI being added is a stamp of approval for that. Also, the timing is perfect. This is happening in December, right as macro shifts are turning bullish and momentum is being validated. So for SEI holders, for those that accumulated on the dip and still have a chance to buy now at cheap price, this is exactly what you want to see at the start of a macro breakout. So very positive and bullish news for SEI. And another great project that we called very early on Discord. And by the way, if you want to join Discord, I'll drop a link to it in the comments and description below so you can see what we are buying and selling and when. SEI is another big bag that I hold, and it unlocked a massive barrier. It's now officially available to New York residents on Coinbase. And this matters for one major reason. New York has one of the most strict crypto regulations in the world. If you get past New York compliance, you're basically signaling that to the entire US market. Positioning as a project that is clean, meet regulatory standards, and we are safe for mainstream exposure. And this will definitely bring a lot of new retail liquidity, millions more potential users who have great institutional comfort. Institutions love assets that pass regulatory stress tests, and SEI is one of those. and we also have bigger footprint on US soil. Most global crypto liquidity originates in the US, and we all know that. So more access to US holders means more trading volume, higher visibility, and of course pushing the price up. So that's definitely a major credibility milestone for SUI. And there is a lot more coming for this project in particular. And I've been telling you when it was 80 cents, 60 cents, that for me, SUI would be what Solana was in previous cycles. SUI would turn into something similar to this. And now another very bullish catalyst, not just for say SUI or Bitcoin, but for the overall market. Everyone talks about Vanguard controls a massive piece of American retirement wealth. They manage over $11 trillion. They shape market structure. They dictate flows. And they don't chase momentum. They set the narrative. And now what's happening right now? Vanguard is stepping into Bitcoin. And people don't understand how insane this is. When BlackRock enters Bitcoin, it's bullish. But BlackRock moves fast, innovates, and likes being first. Vanguard is different. Vanguard is the opposite. It moves slow, is more conservative, protects long-term retirement money, and doesn't position for hype. They position for decades. They position for long periods of time. So if Vanguard allocates even a fraction of its $11 trillion into Bitcoin, it signals that Bitcoin has officially become part of global retirement strategy. Bitcoin is now a generational asset class, and the last pillar of traditional finance has surrendered right now and accepted Bitcoin. This is the momentum where mainstream adoption for crypto begins. And you have to realize that we are watching the transition from Bitcoin is risky to Bitcoin is a strategic allocation. That's a completely structural shift, and that's very bullish for crypto. This coincides actually with a massive signal, the early easing, which begins now. Let's look briefly at the macro factors. This is where everything ties in together. The Federal Reserve just injected $13.5 billion of liquidity into the system in one single day. And that alone is shocking. But what makes it insane, it happened on the exact same day that quantitative tightening ended. So for 2 years, the Fed has been draining liquidity, tightening financial conditions. Now, tightening is over and liquidity injections are starting. There is stress in the system. The Fed doesn't pump liquidity for fun. This means something cracked internally if they did that move. And the Fed responded immediately. This signals they don't want liquidity stress heading into 2026. Once the liquidity stabilizes, we'll see more liquidity flowing into the system. And for crypto, this is extremely bullish. Crypto, thrives on liquidity. When liquidity goes from negative to neutral, when it stabilizes to positive, this is where crypto rallies, and we'll see that happening slowly. And I think what's coming ahead is one of the strongest macro alignments that we've had since 2020 and 2021. So I hope you found this video helpful. If you did, please don't forget to like, subscribe, and share. It will be much appreciated. Thank you for watching. I'll see you in the next video.